Russell 2000 has an 11 median PE, earnings growth 800 basis points faster, and it just posted 11 days where 10 out of 11 days had a 1% move.
Hold on to your hats. What I'm about to reveal could be the key to unlocking unprecedented gains in your portfolio. Imagine doubling your investments in just 6 months. Sounds too good to be true. Well, that's exactly what one of Wall Street's most respected analysts is suggesting might happen. But who's this mystery prophet of profits, and why should you care? I'm talking about none other than Tom Lee, the legendary analyst who accurately predicted the 2020 market bottom and the subsequent bull run. And now he's done it again, but this time it's not just about the broader market. He's identified specific sectors that are primed for explosive growth. And I've got the inside scoop for you. Now I know what you're thinking, another market prediction, haven't we heard it all before? Well, my friend, this might well be different, and I'm going to show you exactly why in the next 20 minutes or so. But first, let me share something truly exciting with you. You see, why Tom Lee's predictions are making market waves, my team and I, which is basically Winston and I, have quietly been crushing it behind the scenes. We're up over 80% already on our teaching portfolio this year. That's a staggering $24,000 gain on a $30,000 portfolio. And we're not keeping our strategies secret. We're hosting an exclusive webinar where Winston, yes, my adorable little golden retriever, with an uncanny nose for profitable trades, and I will share our trading strategies, 3 trading strategies for beginners. But hurry, grab yourself a seat at felixprehn.org/webinar for your free spot. Now let's dive into Tom Lee's earth-shattering prediction here. On July 31st, Lee sent out an intraday alert that's got the investment world buzzing. He's predicting a 4 to 5% rally in stocks after the Fed meeting, led by small caps. But it gets more interesting than that. Lee believes there is an 80% probability of this rally happening. That's not just confident, that's practically certain in the world of market predictions. But why is he so sure? Well, that's what we are going to explore in depth today. Over the next little while, we're going to break down Lee's rationale, explore the key sectors, stocks and ETFs he's bullish on, and I'll give you my top stock picks for each sector, according to the great man himself. By the end of this video, you'll have a clear roadmap for potentially explosive gains in the coming months. Let's start with small caps. Lee is particularly bullish on the Russell 2000.
I think it's giving the green light for small caps to rally finally.
Represented by the ticker IWM. He calls this the summer of small caps. But why? Historically, small caps have been far more sensitive to Fed rate cuts. When the Fed signals a dovish stance, as they are expected to, small caps tend to outperform. Lee is predicting a 6% or more rally in small caps after the Fed meeting. That is significant. The IWM ETF, which tracks the Russell 2000, could see substantial gains in the coming weeks. Let's dive a little bit deeper into the data that Lee provides. Since 2022, the S&P 500 has typically been up slightly into the Fed meetings in the 5 days leading up to that meeting. But this time it's different. The S&P 500, tracked by SPY, ticker symbol SPY, is actually down 3%. And the NASDAQ, as in QQQ, is down 6%. That unusual weakness is what's got Lee so excited. He's identified 6 instances since 2022 where the S&P was down going into a Fed meeting. In 5 of those 6 instances, the market rallied significantly in the next 5 days following the meeting. We're talking gains of 3 to 5.5%, nothing to sniff at. So let's break these down. January 2026, 2022, the post-Fed meeting rally was 5.5%. In September 2023, we saw a rare decline of 2.9% because everybody thought we were going to get a recession and the end of the world. November 1st, after the Fed meeting, a 5-day rally of 3.4%. In January this year, a post-Fed meeting rally of 3.1%. And then in May this year, again, a rally of 3.4%. Lee believes this time could be even better. He's predicting a rally of 4 to 5% after the meeting, adding potentially 100 points to the S&P 500, and he thinks this is going to happen with an 80% likelihood. Now let's get more specific. The specific ETFs that Lee is bullish on are the following. Small caps, ticker symbol IWM. We've already discussed this, but it's worth emphasizing. Lee sees the potential for a 6% or more rally in small caps. The IWM is the way to play that trend. Financials. With interest rates potentially peaking, banks are poised for increased profitability. While Lee doesn't mention a specific ETF for the sector, investors could consider the Financial Select Sector Fund, ticker symbol XLF, for broad exposure to the financial sector. Another stock he likes is also JP Morgan, ticker symbol JPM. Regional banks. This is an often overlooked sector that Lee is bullish on. Ticker symbol KRE is the regional banking ETF, which could be a good way to gain exposure to this sector. Touch of warning there are some regional banks and small banks still looking particularly dodgy, like Schwab, for example, and that could shake that up. But very likely, Uncle Sam's going to bail you out, so with a bit of horizon, it's probably all right. The next sector he likes is industrials. As the economy rebounds and interest rates fall, industrial stocks could see significant growth. The ETF here is XLI, a popular ETF for the sector. Next are FANG stocks. While they've had a rough time lately, Lee believes they're due for a comeback. QQQ is an easy way to track them, essentially. I know it's the NASDAQ 100, but it's heavily weighted towards these tech giants. Now let's dive deeper into each of these sectors and our top stock picks for each. So small caps, IWM. Yeah, it's the Russell. We kind of covered that. And the rationale for that is that these companies are typically more domestically focused and can be more sensitive to changes in the US economy. Top picks in this space would be Crocs, ticker symbol CROX. They've shown incredible growth and adaptability for making particularly hideous footwear, which people for some reason seem to like. Then we have financials, as mentioned earlier. The top pick here is JP Morgan Chase, because it's probably the only real quality bank out there, though nobody really understands banks. But they basically have an insurance policy with the government. So we shouldn't be too worried about it. And they have a pretty diversified business model: investment banking, consumer banking, asset management, and lots of revenue streams. For regional banks, the top pick is probably here PNC Financial Services, though I would more likely lean towards buying the EFT that I mentioned earlier. But PNC has pretty strong presence in growing markets, and they have invested more in technology than others. And being focused in that sort of middle market commercial lending sets them apart from a lot of their peers. Industrials, the top pick here is Caterpillar, the guys who build the diggers. They're a global leader in construction and mining equipment, and they're well positioned to benefit from increased infrastructure spending and just generally increased spending on machinery as rates come down. Their recent investments in autonomous and electric vehicles show they're prepared for the future of that industry. FANG stocks. Well, while FANG stocks, Facebook, Meta, Apple, Amazon, Netflix, Google, Alphabet, have potential, my top pick here is Amazon. Amazon's diversified business model, including e-commerce, cloud services, advertising, make them resilient to economic fluctuations. Plus, their LLM is really amazing. And they have invested into healthcare and AI, so they're not resting on their laurels. And in my opinion, Amazon is one of those rare companies that's always building the next business that's going to happen in 3 years or 5 years and 10 years. It's one of those founder-led businesses that is just extraordinary. Now, I know what you're thinking. This all sounds great, but how can I be sure? Well, let's look at Lee's track record. He correctly called the market bottom in 2020. Predicted the subsequent bull run, and has consistently outperformed his peers. But here's the kicker. Lee's not just making vague predictions, he's backing it up with data. Let's break down that analysis a little more. Lee says that while the S&P is down 3% from its peak and Nasdaq's down 6% from its peak last month, Interestingly, the Russell 2000, ticker symbol IWM, has remained flat, and Lee sees that as a sign of strength. The unusual weakness in large caps combined with the resilience of small caps is what got Lee so excited about the potential for a rally. I know what you're thinking. This sounds too good to be true, and you're right to be skeptical. In fact, I encourage skepticism. Investing always carries risks, and past performance doesn't guarantee future results. But that's why it's crucial to have a solid strategy, which brings me back to our strategy. Remember how I mentioned that we're up 80% on our teaching portfolio this year? Well, I'm never promising you results. I promise to share with you exactly what that strategy looks like, teach it to you, show it to you, so you walk away with it. And that's all we can do, isn't it? If you head over to felixprehn.org/webinar, grab yourself one of those free spots. And then let's just do a quick recap here. So Tom Lee, respected analyst who's been right in the past, is basically saying he's super bullish on IWM, as well as financials, regional banks, industrials, and FANG stocks. And we explored each of these sectors in some depth. I've given you our top stock picks for each in addition. Remember, though, the key to successful investing is not just knowing what to buy, but when to buy it and when to exit. Lee believes that now is the time to act, particularly in the small cap space. The Russell could see gains of 6% or more in the coming weeks. The most important thing, of course, is always do your own research or get a golden retriever as smart as mine. Well, Lee's predictions are, of course, compelling and his track record is impressive. The market can be unpredictable, and position sizing, a solid strategy is always the crucial thing here. I always say to people, the best indicator and the best data won't make you any money unless you have a solid strategy, which is why I teach you that strategy completely for free this coming week if you sign up at felixprehn.org/webinar. That's all for today, my friend. Remember, the market waits for no one. Act on the information if you wish, at least do some research, and you could be thanking yourself in just a few short weeks. Until next time, this is Winston and Felix signing off. Crystal ball that could predict the stock market movements with uncanny accuracy. Now, if I told you that such a crystal ball exists and is hidden in plain sight,